Good morning, everyone. It's Jared here again from the Alpha Capital Trading Group and just running a quick preview for the week ahead. Now, as we progress to this week, we have very much a change, I suppose, in the fundamental dynamics compared to the two previous weeks. With when we look at the economic calendars for the last 2 weeks have been very, very data heavy, very, very volatile. But when we look at the economic calendar this week, we have a much lighter quantity of specific data fundamentals. Now, more prominently speaking, if we start off today, the big thing that I'm kind of paying close attention to today is the ECB Lagarde speech, given off the back of the ECB interest rate meeting last Thursday, where we saw that bullish euro take hold. Now, I suppose from our perspective, we're looking to see is there any more insights or clarification from Lagarde from the press conference last week to see how does that affect the markets, more broadly speaking. So as we know, last Thursday, we had the Bank of Canada, we had the Bank of England and ECB meetings, which ensued an awful lot of volatility into the markets as a direct result. So it'll be conscious now to see how does that affect the markets, given that we've NFP on Friday this week. Okay, so normally speaking, the Monday after NFP does be fairly subdued in a normal circumstance. It's generally one of the quietest trading days in the month as the markets kind of digest and I suppose read back into the NFP figures in more detail. So Tuesday, not really too much coming out Tuesday in terms of fundamentals and data. Few small bits here and there, but nothing too significant. Probably the goods and trade balance from the US being the most volatile. And again, the Westpac consumer confidence in Australia overnight. Now, as we progress and as we move into Wednesday, Bank of Canada's Governor Macklem speech, which is 2 weeks after the no rate hike by the Canadian, I suppose, monetary group, which is also known as the Bank of Canada. So when we look at that, there was no rate hike, as we said. So it'll be interesting to see, is there any more kind of clarification on that as to why Canada did not raise rates. Now, when we look at the Canadian data last Friday, we can see that largely speaking, the Canadian data last Friday was negative, was underperforming. And we saw the likes of USD CAD rally quite significantly off a bullish dollar and a weaker Canadian. So definitely keep an eye on that. I think Wednesday could be an interesting one for anyone who trades the Canadian dollar. Thursday, as we move to the back end of the week, I think Thursday is definitely going to be the busiest volatile day of the week. We have small data in the morning with the European Commission release economic growth forecast. So that could be that. I think that could be an understated market mover this week. So definitely worth keeping an eye on that. But more prominently speaking, as a US based trader myself, I will be focusing on the CPI data, both the monthly, the yearly, the core, but also the ones associated to excluding food and energy prices, because as we know, food and energy are the biggest inflationary sectors within the global economy at the moment, is that, and metals, I suppose, as well. So definitely I would be paying very, very close attention to these inflation outlooks this week. Second to that, then I will be kind of after the massive beat on the NFP last week, I will be paying very, very close attention to the initial jobless claims as we progress towards the weekend. Now, Friday speaking, generally it doesn't tend to be too volatile in terms of, because you do tend to see a lot of trap positions into the weekend. But this Friday we have a raft of data from both Germany and also the UK, which I think is important to keep an eye on. So see, consumer prices in Germany, harmonized index, worth keeping an eye on. And also in the UK, we have GDP, we've manufacturing production, industrial production. So definitely worth keeping an eye on that as well, because I think these would be the big ones, particularly the GDP figures. Now, as we close out the week, we do have the Michigan Consumer Sentiment Report and the Fed Monetary Policy Report fully released. So I think in the afternoon, we could see some volatility, particularly after the open between 3 and 4 p.m. Now, broadly speaking, as a little clue, which we'll be showing to you now in a second as we open up some charts, the volatility this week hasn't just been around the opens of kind of pre-market, because we have seen a lot of volatility into the weekly closes. Now, broadly speaking, as I progress over to TradingView now, and we will share some of these charts, we can see that the price action this week has been significantly volatile off these opens. Now, prominently speaking, if we look at the S&P, Just obviously a quick market outlook. We can see how last week we had a very, very strong initial start of the week. Thursday and Friday really did tear back some of those gains on the upside, but we did manage to hold this 44.50 level. So pre-market this morning, the price action hasn't done terribly much, pretty flat again, traditional, but I do think there is the potential for another wave into these lows here. So it'll be interesting to see how does the price action develop today off the back of those NFP figures. Does the price action become more volatile today, or is it a trappy consolidation outlook for the S&P? Now, broadly speaking as well, the S&P has been fairly subdued, except for the close really on Friday evening when we had that tail off kind of 8 or 9 o'clock. So this is something that I kind of wanted to allude to in the fact that we do see sell-offs, significant buys and selling, both in that last hour of the open, particularly for these cash price opens on these indices. You can see here 8, 9 o'clock heavy selling, 8, 9 o'clock here heavy buying, again 8, 9 o'clock heavy selling, we have heavy buying, and then over here then we have heavy buying again. So the 5 days last week all presented very, very sharp movements both in the buying and selling directions last week, and that was obviously brought about by the wave of not economic data, but corporate data with the quarterly earnings season. So definitely keep an eye on that, because I do think that's important this week to factor the price action into these closes, because what that's actually basically showing to the markets is a lot of people are nervous about carrying positions overnight, which is a very, very clear sign of the volatility that's in the markets. Now, again, if we move across to the Dow Jones, exact same scenario in the Dow Jones. After a strong break and close above 34,000, the price action Monday, Tuesday, and Wednesday continued moving lower. Now, Thursday and Friday has continued to grind lower on the daily, and we can see that emphatically with this clear rejection of 35.6. Friday's initial impulse did come into 34,800, which is a level I've marked up and had seen a significant bounce. So I suppose if you looked at the shorter time frames, it'll be interesting to see how does the price action react today. But I do believe that the price action should, in theory, come down and try and visit these lows again. But it'll be interesting to see, does that confirm, or does the price action remain in this choppy current range bound? Now, last but not least on the indices is that of the Nasdaq, and we can see the Nasdaq did the exact same thing as the other two. We broke higher through 14.4. We continued to move higher Monday, Tuesday, and Wednesday. We saw that tail off on Wednesday into Thursday. We had the sharp wick rejection on the 3rd, and we saw that bearish engulfing structure where the price action came down to this 14,400 level, engulfed this wick, and seen a subsequent sharp bounce to the upside. But since then, since the close last Friday, again, we can see the volatility on the Nasdaq. Nasdaq came off a little bit. Price action so far this morning has ranged slightly lower, but is in this consolidation stage below this 200 EMA on the 1 hour. So definitely keep an eye on that today into the open. So very, very clear outlook. If we look at the DXY, just to kind of round off everything for the preview video, we can see how the DXY had broken through the 97 handle. We have come back pre-existing into these 8 levels after the kind of the false break on the upside. But a lot of this selling momentum last week was brought about by not only the bullish pound, but also the bullish euro in the wake of Thursday's both respective press conferences and meetings, interest rate meetings. All right. Now, I suppose short term, I suppose it's worth keeping an eye on the dollar, because as we know, the dollar and the indices tend to be inversely correlated. But also speaking, the dollar and the euro tend to be inversely correlated as well. So if the dollar is euro, I think that should affect if the dollar is bullish, that should affect the euro and see a weaker euro. If the euro is stronger, that should mean the dollar is slightly weaker. So definitely keep an eye on that. And last but not least, generally with a stronger dollar means we have weakness in the indices as well. So I will be monitoring that very, very closely. So we will be back later in this week with another recap, possibly Thursday, more likely to be Friday, in terms of how we'll assess the markets after what's been a less volatile week for economic data. Have a great week, everyone. Thank you.